Hi, it's October 2021. Tesla shares over US $900. It's another all-time high being made. So what can we do now? Appreciate a like if you like this video and do subscribe to my YouTube channel. Tesla is over US $900 right now. This is the share price chart. See, it's been up since March 2020 when its pre-split price was around $50. And since then, it has surged to around 910 USD. Isn't it incredible? As of last Friday, it closed at 909 USD. We passed the peak in January 2021 when it was around $840. So right now, you actually look at this price, is around 9% more than the January 2021 price. In fact, even this period, the price of Tesla share price went up before the 3Q results on 20 October 2021. PE historical basis is over 1,000 times. And the question now to ask is whether US equities correction of crash killed Tesla price. So how well did Tesla do? It's improving on a trailing 12 months basis in terms of delivery, where you see that on the trailing 12 months it exceeded 800,000 of deliveries, supported with strong cash position of 16.1 billion USD. Tesla continued to execute its product roadmap with strong operating cash flow. Just that, if growth is to catch up with the pricing right now for Tesla share price, Tesla will have to spend more on capex. The net income on a quarter-on-quarter basis is also growing, which is good. But is it good enough? The improving operating margin that Tesla is enjoying right now demonstrate that Tesla is very good at what they are doing, despite the fact that they are selling lower average selling price products. Isn't it incredible? The short interest has been declining since May 2021 for Tesla, but it's still at plus 3%. Well, that's because of the PE trailing 12 months to be close to around 300. That may explain for the current short interest. Then again, if you actually look at the figures since May, which is around 40 million of Tesla shares being shorted. But as you go through the months, well, right now in September, October, it's declining to around 3%, which is around 29 million Tesla shares. The question to ask ourselves right now is Tesla a car company or a tech company that may give a different kind of valuation as compared to a car company? Watch this video from CNBC to think through.
Well, one, I think, just broadly, the company is being priced like a software company. It's being priced as an AI company. So it's wrong for investors or analysts to compare it to an automotive company. Because if you look at the valuation of Tesla, it's trading at almost 100 times earnings. This is twice the rate of NVIDIA. And the gross margin profile, the operating margin profile, albeit it's improved, is nowhere even near a software or an AI company. They're just eking out 28% gross margin. NVIDIA has a 66% gross margin, yet it's trading at half the rate, half the multiple on a price to earnings basis. So, that I think that needs to be said, and some sanity needs to be put in place in terms of the valuation. And the other thing that it's pricing in this very lofty target of 15 to 20 million vehicles over the next 10 years. And to your point about CapEx, in order to get 15 million cars, which would be about 15% of the entire auto production market, they would have to build about 24 gigafactories over 8 years. And so they would have to do that about 3 gigafactories a year.
Elon Musk justified Tesla valuation back in January 2021. He explained that the self-driving robotaxi will justify Tesla's massive valuation. So you see that in his valuation maps, it's like that 60 billions in annual car sales, as well as expecting that vehicle deliveries will increase at an average of 50% a year going forward. And not forgetting that there's additional fees for the robotaxis, allowing the company to generate much more revenue per car, like bring software economics to the manufacturing intensive car business. What's full self-driving software? That they are trying to present is like a subscription service allowing company to earn recurring revenue from the drivers. So right now the price is even higher. Today it's around 940 USD already. Question is, when will full self-driving be ready? Recently, it's been announced that Tesla pulls its new full self-driving beta due to software issues. Today's assignment on 25th October is more a case of Tesla signing an agreement with Hertz, in which Hertz orders 100,000 Tesla Model 3 cars for its rental fleet. I always say for analyst price target, garbage in, garbage out for valuation model. The low for the analyst price target is $150, high is $1,200 USD. What a big discrepancy, isn't it? And the average price of $750 USD for financial models is all assumptions, and if you don't do it properly, it's garbage in and garbage out. Yes, Elon Musk and Tesla definitely have good execution skills. Then how? What's my view? Tesla now, is it really priced to perfection at current pricing? That's a question to think through. But we know that the price momentum right now is very strong. And I like what Elon Musk is doing and believe that Tesla will become a very big company in the future. Then again, the price momentum of Tesla right now is really dependent on the risk sentiments. Buying Tesla now is really dependent on broad market view, as well as full confidence that the full self-driving ability will be very ready soon. So if Nasdaq 100 can break above 15,700, Tesla can easily break above 1,000 USD. If not, Nasdaq 100 come back down drastically, Tesla may come back to around support of around 720 USD. I'm not chasing Tesla at current price though. Nasdaq 100 have been up 19% so far this year. You see the chart? Will it scale greater heights or retreats back? This is the number one question that you have to think through at this current moment. Nasdaq 100 has component stocks like Apple, Microsoft, Nvidia, Amazon, Facebook. Tesla is up more than Nasdaq 100 year to date. It's up more than 26% as compared to Nasdaq 100, which is only up around 19% year to date. Tesla in blue and Nasdaq 100 in red. So Tesla price this year performance seems to indicate that when risk-taking activity is stronger, Tesla price will outperform Nasdaq 100. The question again we need to think through is, when will full self-driving be ready? Because this is another value creation component that we have to look through and think through. Looking at the chart without doing a regression analysis, you see that Bitcoin is, as compared to Tesla, Bitcoin seems to have some similarity in terms of how they move compared to Tesla price. They tend to move in sync. Of course, Bitcoin with greater volatility and magnitude in terms of price movement is moving in larger percentage point. Again, when risk-taking sentiment is stronger, both Tesla and Bitcoin perform very well. Any investment into Tesla will require a view of when full self-driving service will be ready, as well as a broad market view of Nasdaq 100 and the Bitcoin price movement. As always, this should not be construed as any investment or trading advice. Do stay tuned and subscribe to my YouTube channel so that I can be kept updated promptly when I release new videos to reflect the changing market conditions.